This is a remote edition of the Scrap Metal Commodities Recycling Report by BENLEE and Raleigh Goldsboro Recycling, February 27, 2017. We are starting with a warning to my fellow scrapyard owners. Of course, it is critical to ensure when a hybrid or electric car comes into our operations, we remove the hard-to-get-out large batteries that are running the drive system. Importantly, though, we need to have increased diligence of incoming scrap that may have these batteries buried in other scrap. This battery came into our Raleigh operation, buried in scrap, and was missed by our team. Here was the result when our crane picked it up, mixed in with other metal. Our team moved quickly, so the fire was dramatically limited. Israel will soon be sending out more information on this for all of us. Last week, commodity prices and economic reports were mixed. On the left, we see U.S. steel production rose to near an almost two-year high and is almost 25% ahead of the start of the year. Oil rose $1, ending at $54 a barrel, so while more than double a year earlier, it remains only about a third of the $145 it hit in 2008. The oil rig count rose again to 602, now about 90% ahead of the 316 low of about a year ago, which is putting people back to work, but the count remains down an enormous 63% from about 2.5 years ago. Iron ore held steady at a 2.5-year high of $91 a metric ton, about 2.5 times what it was a year ago. Scrap steel prices held steady, but prices will be up in March. Global scrap steel demand is increasing, so higher prices are needed to increase supply. Hot-dip galvanized steel rose to $900 a metric ton as demand rises along with raw material prices. Stainless 304 scrap remained steady for another week at 37 cents as the balance in supply and demand continues. Copper fell to $2.68 after dropping hard midweek and recovered Friday. The 5-year copper chart shows we remain near 2-year highs, and copper inventories continue to fall, which could support stable prices. Aluminum was steady at 85 cents as demand remains solid, especially from automotive and truck production. The 5-year aluminum price chart shows prices are near 18-month highs. Aluminum inventories remain near almost 9-year lows, which keeps upward pressure on these prices. The flash market U.S. manufacturing PMI, Purchasing Managers Index, fell a bit in February from January's near 2-year high due to softer output, so these numbers are actually supporting higher prices. Sales of new single-family homes fell slightly in January to an annual rate of 555,000, more than double the 2011 low of 270,000, but frankly only about a third of the 2005 high of 1.4 million. There is major upside here as the economy continues to grow. The final Consumer Sentiment Index came in at a 3-month low as consumers are starting to say, "Show me," as we wait for the major tax cuts and the $1 trillion infrastructure program. Many remain very optimistic, and that's great news. The initial unemployment claims rose a bit to 244,000, and they have remained under the key measure of 300,000 for an incredible 103 weeks, the longest streak in 46 years. With all the positive data, we are getting closer to another rate increase, which is part of slowing the rate of growth. Wall Street hit new highs yet again, as some say it is time for a breather. Importantly, this is helping people feel wealthy as their 401ks and personal assets increase. This wealth effect will help spending, which will support stable to higher commodity prices. With that, we hope all have a safe and profitable week.